the IT services growth. There again, the problem is that the multiples are double the multiples of the large cap. So, some time correction, some price correction has to happen. Then only, the sector will start looking attractive. Otherwise, the whole sector is quite expensive. Right now, the only investment rationale is that you switch something of 50 multiple with 25 multiple and same output. That is what, people are doing probably.
If you had those stocks in your portfolio, would you do that swap as well, Sandeep?
Yeah, if I had, but I don't buy any of the expensive stuff. We are a deep value fund. So we would rather do bottom-up analysis and buy something.
Where is deep value currently? I know it will be bottom-up. It won't be sectorally, but still, which are the themes where the deep value might be available?
So power transmission, ancillaries, power ancillaries and all, because the peg ratios are low. They may be looking expensive, but the peg ratios are low. Whole manufacturing belt, I'm saying, Neeraj, so much money people have made in last 3-4 years, and next 10 years, I think there's a huge amount of money in power ancillaries in the capital goods side, because the P ratios may be looking expensive, but the peg ratios are really cheap, much better than what we are seeing in, tech and FMCG. So we will always prefer, lower peg ratio than higher peg ratio, and those are the pockets. Water treatment, these are the industries which are doing phenomenally well. Even banking, I think after 1 or 2 quarters, the large banks may look good. NBFC is looking decent. So these are the spaces where there is a lot of money which can be made.
So, and then in power ancillaries, is it largely transmission and distribution, or are there others where the peg ratio is really good? It could be equipment companies, whatever.
Yeah. So equipment companies are there, small cable companies. We are very bullish on the small cable companies. We are not very bullish on the large cable names because they are quite expensive. But the smaller cable names, you run a screener, you will find their stocks with 12, 13, 14 multiple also. And they are going to give phenomenal returns. And there are some wire companies which are also going to do phenomenal, because this is a structural story. We like those names. We like some transformer names, but transformers is a very, very well discovered story and very expensive now. So we are not so keen on that. But wires and cables is very, very good space. And then distribution, transmission, some spots are there where the valuations are very reasonable. So we love them. We love the private banks. We love the NBFCs. These are the spaces where I think a huge amount of money will be made.
Okay, thank you so much, Sandeep, for coming and speaking with us on the eve of the TCS earnings as well as Q1 FY26 earnings. So both of those to look forward to. But it's time for another exclusive. With the 9th of July tariff pause extended to the 1st of August, Indian negotiators are gearing up for a fresh round of high-stakes trade discussions in DC. My colleague Rishabh Bhatnagar joins us with more details on this one. Rishabh.
Right, Harsh, what we picked up from official sources is the fact that the Indian negotiating team, which is led by Special Secretary of the Commerce Department, Rajesh Agarwal, is set to visit Washington yet again. Now, this is interesting because this is a fresh twist in the trade talks that have been going on for a while. This exact same team had returned from Washington just last Friday, less than a week ago. And at that time, it was thought that technical negotiations were over and a trade deal was hinged on political will. But what we are picking up now is that there will be another round of negotiations. The Indian negotiating team will be visiting Washington. And this also comes with, like you said, the July 9 deadline shifting to August 1st. That gives an additional 20 days for any sort of negotiations to happen before tariffs kick in. Now, this also is, and we were all expecting an interim trade deal or a mini trade deal by July 9th or thereabouts, but that has not happened. And what has led to this is, of course, uncertainties both from the US side as well as India side. From the US side, it is obviously the tariff threats that are coming in directly from Trump in terms of the pharma threats of about 200% of copper, fresh tariff coming in of 50%. From the Indian side, they haven't budged on agriculture, dairy. Those continue to be red lines. So these are the key sticking points from both ends, and that is what has led to some sort of an impasse. And now we will keep our eyes peeled for the next 20 days till we see some sort of a mini trade deal or an interim trade deal come about.
Thanks for that, Rishabh. In fact, on this trade deal, this is an important one, of course, remember. And when we spoke to Sajid Chinoy earlier today, he spoke about the importance of India doing this trade deal as well. And also mentioned, of course, that the uncertainty of trade deal is truly unprecedented as economic policy itself has become the source of uncertainty? Listen in. Sajid, simple question to start off. This uncertainty around trade deals, I mean, how do you foresee the impact of something like this, which is wavering so much and not quite steady? How do you wrap your head around forecasting an impact of such a set of events?
It's very hard to forecast this because this is truly unprecedented. In years past, we've seen external shocks. We've seen wars, we've seen pandemics, you've seen droughts. And the whole idea of economic policy is to offset or mitigate the impact of those shocks, right? And thereby introduce more certainty in a world of exogenous uncertainty. I think what we're seeing in the last 6 months is, and this is quite remarkable, that economic policy itself is the source of uncertainty, which we haven't seen, in decades. And the fact is, I don't think this is ending anytime soon. I know the US administration has said that there is another month and tariffs will kick in on August 1st, but it's entirely possible that, this gets pushed out further and we're living in this constant, sense of uncertainty. So modeling this is extremely, ambitious and difficult. But I think this is quite worrying because I think, the last thing that business wants is uncertainty. We've already begun to see growth in the US through all of the noise, weekly, monthly noise, slow quite meaningfully. We expect in the first half of 2025, US growth will have averaged just 1.25%. So you've begun to see that, the policy uncertainty has begun to affect economic actors. It's important to note that even if the announcements of this week do not result in higher tariffs, US effective tariffs today are close to 14%. And to put this in perspective, last year, the effective tariff rate was about 2.5%. So you've seen a 5 or 6 time increase in tariffs. And, there is no free lunch in economics. Eventually, this is going to impact either consumer prices or profit margins of firms, either in the exporting country or the importing country. So there will be an economic impact. So I think the future remains very uncertain and, will weigh heavily on how we think about economies going forward.
So Sajid, let's put this into perspective. US second half growth slows down. China, presumably people believe the second half would be visibly weak. And if indeed as you said, right, the countries or companies in the exporting countries could hit profit margins and thereby growth there might get impacted. So a synchronized slowdown of sorts, very likely over the next 6 to 12 months. What's the antidote to this? Would it be monetary policy, a synchronized monetary policy action by central banks across the world? And is something like that even possible in such a disjointed world now?
It's a great question, Neeraj. So I think, as you saw it, second half, we worry about synchronized slowdown. The US is expected to slow. China has begun to slow. For me, the biggest concern is Asia. And I say Asia outside of India. I think about the ASEAN economies, because the first half of this year, they've benefited enormously from front loading. So exports, in ASEAN economies and the rest of Asia until the middle of the year is running at a 20% annualized rate. That's never going to sustain. Why is it running at these rates? Because exporters have been front loading heavily, anticipating tariffs to pick up later in the year. And you've also seen a lot of transshipment that's come from China through ASEAN economies, through Vietnam, through Thailand, to the US. So in a way, the shock has been buffered because of front loading and transshipment. So even if tariffs don't go up from these levels, you will see a sharp slowdown in the second half in the rest of Asia because the front loading is going to unwind and because the US is going to frown on the transshipment. We've seen every letter that's gone out this week has kind of warned countries that if they begin to transship, they'll attract higher tariffs.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so
Welcome back. Thanks for staying with us here on India Market Close. That time of the show when we go across to Somit Sarkar, who joins us with all of the chatter he's been picking up from dealing rooms on our segment Heard on the Street. Somit, what is it that you're picking up today?
Well, firstly, the first stock that remains in focus is PI Industries. The stock was down around 3% odd in trade. Dealers are indicating that there are high sell flows on institutional desks. Both domestic and foreign institutions have been selling this. Counterpart of this could also be because of the expecting that the export data is expected to be on the weaker side for PI Industries, hence the sell flow coming in for the stock. For Gopal Slag, Ashapura Mine and RK Forging, dealers are indicating that there are large buy orders on large HNI desks for these three names, so keep an eye out for these three counters. For IRDA, multiple dealing rooms have been giving positional buy calls for this counter for the last couple of trading sessions. Now, one of their rationale is the fact that the valuations of the company continue to remain quite cheap when you put in context this with the 30% AUM growth guidance that the company has given. So in that context, the valuations continue to remain cheap is what dealers are saying. For VSA tillers, there are buy flows on HNI desk on anticipation of a GST rate cut that could come in for small tractors, and hence we had seen this kind of a up move in VSA tillers. And lastly, it's CG Power. Dealers indicate that there are buy flows on domestic institutional desk on for CG Power. The stock has been consolidating off late, and dealers are expecting some up move in the share prices from here on. So keep an eye out for CG Power as well.
Okay, so some of those stocks on your radar. Thanks, Somit, for joining us and giving us that perspective. Now, the other piece which is also, which we've just got in terms of wind is SBI. 25,000 crore QIP, which was lined up, or rather approval for which came in Q4 FY25, has actually likely is going to go through very soon as possibly next week. This is as per Bloomberg. Part of SBI's plan is to support loan growth, strengthen balance sheet. Of course, the capital adequacy of SBI is below the 11% threshold, closer to the 10% threshold. They're doing a 1% ROA, and therefore, and likely, Neeraj, growth will kick back as well for some of the lenders, given the 100 basis points rate cut.
Yeah, this is large, right? This is large, and we talk about primary market activity adding to the secondary market pressure. This is 25,000 crores of SBI paper, which very likely will see subscription, right?
Yes, it will.
That could be an interesting one too. Is the growth capital, you would reckon?
Yes, it will be, and comfort capital to a certain extent that allows them the bandwidth to grow if growth favors the industry. So yes, but Aditya Shah also joining us with regard to, he's going to be with us for the next hour. So welcome, Aditya. Good afternoon. Do you have a view with regard to this SBI 25,000 crore equity raise? Possibly, do you believe that they are seeing stronger growth, which is why they are accelerating the fundraise very, very quickly?
So part of it is growth, but part of it is also that the tier 1 ratio for SBI is running really very low, and SBI really needs some capital for growth. So from my perspective, this was already a given over the last 1 or 2 years. There's nothing to get surprised about. This is good for SBI. Equity capital coming in will mean that SBI is able to lend very cheap. So positive for the company and along the lines as expected.
Okay, all right. So that's with regard to SBI. Kush, do you have a view with regard to an SBI?
So, Harsh, SBI has been holding steady, gaining some ground, but the 820, 825 zone has acted as a resistance about 4 times in the last month and a half or so. So, I think any trigger or any push that takes the stock past these levels will actually put the stock in a new uptrend. Right now, there is consolidation, mild negative bias, but 825 is the level to watch for on the upside.
Kush, we asked you your broader take on IT, but some counters, and I was just trying to pull out which ones are buzzing. If we can pull out some of the IT names, there's a Coforge which is down 2, Infi is down 1.2 odd. Any names in particular? Any favorites within this pack for you?
Even the favorites have started to crack, Harsh. That's the kind of pressure that the IT space is witnessing. I would regard some of these moves as profit booking. So, for example, something like a Coforge, right now taking support at the 20-day moving average, more of a profit booking round. Bsoft has also started running higher, but down on thin volumes, taking support near the 50-day moving average. So, this could be a profit booking opportunity. I wouldn't jump and buy straight away because you've got a big event lined up, the TCS results lined up, which could set that trend. But on the whole, I think the IT sector run could be muted going forward as well. So TCS, Infosys, HCL, some of the big names I would stay out of. On my list are Coforge, Bsoft, and Persistent, as in when it halts the fault. Right now, it seems to be continuing. Today, it's reached the 200-day moving average as well. So Persistent, Coforge, and Bsoft, these are the 3 stocks on my radar. Not a buying call just yet, but something to watch for, see where the fall stands.
Okay. Well, time for the stock of the day, and the stock of the day has to be Crizac, which is soared in trade after, well, I think a bulk deal and a notable name came in and bought the stock. Mahima is here to give us more details. Mahima.
Right. So, as you rightly mentioned, the stock is buzzing today because of the bulk deal that took place and trading at its day's high point right now. And this is followed after a bumper listing yesterday that the company saw. Now, on the first day of listing, it saw listing gain of around 14% and closed 25% higher yesterday. And plus, as Neil sir mentioned earlier as well, yesterday around 14% of equity changed hands, and Abacus is the one name that emerged as the buyer of the counter, where it bought around 2% equity in the company. The stock has been flying in trade since yesterday. As I mentioned, it opened with a 15% premium and went up to 25% till closing. Today also it touched intraday high of almost 10% and trading at its day's high point right now. In terms of the business of the company, it's basically into B2B education platforms and agents in global institutions. So it partners with these global institutions in terms of higher education. In terms of the financials of the company, it's been a good growth when you compare FY24 to FY25. Overall revenue growth was at 274 crore in FY23, which has gone up to almost 849 crore in FY25. So a good 3-year CAGR as well as a good growth of 60% as compared to FY24. The EBITDA also has significantly gone up and in fact doubled almost from 104 crore to almost 212 crore in FY25. So a 45% growth there as well. Profit after tax has also grown fourfold because it's gone from 110 to almost 512 crore in FY25. Margins, however, are a tad bit concerning because margins have gone down from around 27% in FY24 to 25% in FY25. But in terms of revenue concentration, highly concentrated revenue coming in from UK, almost 95% of revenue comes from UK, another 3% from Ireland, around 1% from Canada, and just 0.5% from other countries. In terms of the overall base of agents as well, that has been on an increasing trend and more than doubled from FY23 to FY25, where it's around 4,000 odd number in FY23 went to around 10,300 odd number in FY25. Lastly, in terms of the return ratios also, this company has strong return ratios as this is the ratio as where FY25 stands, ROE at 30% and ROCE at 40%. So, this is with respect to everything that you need to know about the company and of course why it's buzzing in trade today.
Solid moves there. Thanks a lot for that, Mahima. And I wonder, Aditya, if you've looked at this new kid on the block.
No, Neeraj, sir, not looked at this, so will not be able to comment on.
Difficult to get a chart check on this one too, because it hardly has any history. But interesting mover, Harsh, and more so simply because of the buying that happened yesterday, and the name of the buyer bringing about that further reaction today.
Correct. It's mostly because of that, and the nature of the buyer as well. Abacus is no small fund, and we've got a good track record, and therefore maybe that 10% move warranted is how we would put it. But the other piece is Flair Writing. Let's pull up that stock as well. Mahima today doesn't seem to be talking about stocks which are anything less than 10% higher. And Flair Writing is the other one. So Mahima's here giving us a perspective as to why Flair Writing is up 10%. Mahima.
Right, so one note on Flair Writing from Ambit is the reason as to why the stock is flying in trade today. Basically, they've given their reason as to what makes them bullish on the counter. They're saying that the Q4 results, overall, the domestic growth did accelerate, however, export declined, but management expects demand recovery both in exports as well as domestic markets in FY26. Margins were impacted across board considering competition plus product mix changes and raw material inflation as well, but that too will be sustained in FY26. Plus, what they're saying is that legacy pen players are expanding into adjacencies, and that is into premium segment, and that is something that will bring growth to companies like Flair Writing as well as DOMS. Now, Flair's revenue growth has picked up, and overall sustenance is something that will drive the re-rating going forward. They prefer Flair over something like a DOMS is what Ambit has said. The second note also, Nuvama had come out with a note on 4th of July, which was an interesting one because they had met the CEO, and the CEO had given them some guidance with regards to this counter. Of course, they've reiterated buy rating and revised the target price to 400 for Flair Writing, which was earlier 340. They've said that management told them that revenue will expand to around 15 to 16% for the counter. Rapid growth in creatives, that is around 40%. Steel bottles around 50% and pens around 10% is something that they expect in FY26. So it's adjacencies that will bring in growth for the counter, and gradual margin recovery is likely on the cards because of higher share of premium products and increased in-house production as well. Lastly, Flair expects to scale up the steel bottle business to almost 1 billion rupees by FY27, and that is something that will expand their margins also going forward. So these are the two interesting notes on the counter, and the reasons as to why the stock is buzzing in trade today.
Okay, thank you so much for that, Mahima. Aditya, let me come straight to you. Flair Writing up 30% last 3 months. Is this at all on your radar? Is this space? And there are a couple of players in that space now. There's also a DOMS. Would that space be of interest to you? Probably consumption to a certain extent?
Harsh, I track this space, so will not be again able to comment on.
Okay, all right. Kush, do you have a view with regard to technicals?
So very interesting moves on this one, Harsh. Was due a breakout last week also. You saw a spike in volumes accumulation very clearly on the cards. 290 was the resistance threshold that's taken out today. So I think this up move, could be here to stay. On the upside, you're looking at a next major resistance level at 335. So yes, if you have a position, continue to hold. If not, with a stop loss around the 300 mark, you could still play for 1:2, 1:2.5 kind of a risk reward ratio on the upside. So Flair Writing after this kind of breakout looks interesting for levels of 335.
The other set of stocks which are moving, let's pull up a Campus Active. Let's pull up something like a Relaxo. Again, now that we're talking consumption, maybe some of these names also doing fairly well in trade today. And Relaxo, in fact, can we pull up maybe the 5-day chart? My sense is that this has been buzzing since a few days. I've seen it buzz maybe a couple of days back as well. So just trying to figure this. Okay, so it's up 18% over the last week. So plenty of zing on something like a Relaxo. Aditya, I wonder if this is a pocket where you have a view. Campus Active, Relaxo, there's plenty of buzz in these counters. And if not, how are you playing consumption, Aditya?
So from my perspective, again, Relaxo is also a really very expensive stock. It has undergone a time correction over the last 2 to 3 years. There's buzz of some big mutual fund entering into the stock, and the stock is really going about. But within this space, something like a Bata looks really very interesting to me. That's a good space. But again, valuations across the space are really very expensive. Uh, but nothing particularly in consumption excites me with respect to the valuations that they have got. Most good stocks are really very expensive. So again, indirect play with respect to capital goods or chemicals is something that I want to play for. I don't want any exposure into any of these stocks which are highly valued at 60, 70, 80 times price to earnings.
Okay, okay. But there is traction there for sure. And Kush, just wondering, would you trade any of these because of the traction, just the near-term trading idea?
So Campus still looks like it's got some more upside left. 300, about 315 odd levels could very much come into play. Some of the key resistances around the 220-day moving average, they've been taken out today on the back of strong volumes. So yes, for levels of 300, 315, I would consider a trade on Campus. Momentum just picking up. The RSI is just picking up on this one on the higher side. So I would consider a buy trade on this. For the stop loss, I think 275, which is the congestion zone, as I mentioned. So that should act as your stop loss. But for something like a relaxo, it will not be a bad idea to book profits. It's already hit oversold territories once. Some profit booking, and then once again, it's enter those territories, and there is resistance around the 525 mark. So if you have relaxo, might as well book profits. Campus still an active trade.
Okay, so that's the take on consumption broadly. Some big movers within that space today. The other one is the housing finance space, where Bernstein has come out with a note on all the housing financiers, or rather 6 of them to be specific, and suggested that 5 of them to be specific, and suggested that it's a space which should ideally be in focus. Those are the target prices in front of you. But Home First was the one which was absolutely abuzz. Let's pull out the chart for Home First, because it zoomed up in trade at the start, and thereafter we've seen a sustained cool off, now up just 1% in trade. Certainly some of these counters not cheap, Aditya, but there's a large opportunity available. So how should you play housing financiers therefore, and how should you rationalize valuations with the kind of opportunity that's available?
So again, housing finance companies will continue to do extremely well. Housing growth in India will continue to grow very, very strongly, and all of these companies will continue to benefit. In my opinion, on the bank side of it, something like the HDFC Bank looks very interesting with the merger of HDFC. If you look at within the NBFC space, Bajaj Housing Finance would be the top pick, and they will continue to do extremely well over a period of next 5 to 10 years. Something like an Aras Financials also looks interesting, but these stocks are really very expensive. In my opinion, this is not the time to go very aggressive on the housing finance space, as stocks are really very expensive. You need to move to microfinance space, where there's a lot of traction and a lot of valuations are available cheap. In the housing finance space, stick to companies like Bajaj Housing Finance or an HDFC Bank. Move to microfinance space where good opportunities exist with respect to the valuation.
Okay. Okay. So, but all right. Are there specific names that you want to highlight, Aditya? You said Bajaj Housing. Not sure I heard you right. You feel Bajaj Housing is attractive at the current valuation?
Bajaj Group, you never get Bajaj Group at a very cheap valuation. Sure. The history of the company will continue to say that the valuation will be really very aggressive. But from a growth perspective, I feel they are at the helm of all the housing finance companies per se. Mind you, smaller companies are also not available cheap within the housing finance space. Many of them trade between 5 to 6 times price to book. So from my perspective, there's no attractive valuation per se within the housing finance space.
Okay, Kush, you have a technical view, because the chart just looks so attractive that if I don't ask you a question, that's me doing injustice. So what's happening in Home First? Give us perspective.
So Home First, I think, has a supply zone. If you look at the upsides, not just today. In fact, in the in some of last week, some of the sessions, the stock actually did zoom to 1400 levels, a couple of times, but wasn't able to hold on to those. So very clearly, there is a supply zone at the 1400 mark. Seems to be some exit coming in at that level. So for me, this remains a buy, but any kind of fresh momentum, fresh upside trigger would come post the 1700 level is taken out. I think on the other hand, something like an Aptus value, that looks very attractive. Momentum indicators on the upside, volumes in the last 3 days have seen an uptick, a close above the 345 mark, which it is very close to currently, will actually start a new breakout for levels of 360 and 375. So home first, interesting, medium trend, on the upwards intact, but 1400 remains a key resistance mark.
Okay, so that's with regard to some of the housing financiers. Some buzz seen there, but fizzing away, all of that. But time for some buzzing stocks, where there is still some fizz. Quality Power is one of them, Enviro Infra, Shilpa Medicare. Jasmeet here to tell us why they are buzzing, and we'll understand whether that's warranted or not. Jasmeet.
Well, right. First on my list is Quality Power. As we know, the stock is up 13% in trade today, and it's almost a 55% in a month. So let's understand where the stock is buzzing. Firstly, the company has partnered with Yash High Voltage to acquire 100% stake in Sukrut Electrics, while this company is based out of Pune and is into transformer component manufacturing. It is a 50-50% stake between Quality Power and Yash High Voltage to acquire this company, while the acquisition has been executed by doing a complete buyout from a German MNC. The next on my list is Environment Infra Engineer. While this company has entered into a JV with Alto Pro Infrastructure for new order, the size of the order is 400 odd crores, while the order is received from Maharashtra Industrial Development Corp, and it is in regards to Panchganga river pollution control. While this order is to be executed in next 24 months, and management's order book as of FY25 stands at 1100 odd crores. The last one on my list and to watch out is Shilpa Medicare. While the company's unit number 6 has received from Bangalore GMB certificate. The certificate has been received from Saudi Food and Drug Authority. This is in a site visit which has happened between 19th to 20th of Feb 2025, while the inspection has closed with a 0 observation mark, and this facility is basically engaged in manufacturing, testing, storage and of finished drugs. So these are the stocks to keep in watch. It'll be interesting to watch out how the Q1 result turns out for all these companies going forward.
Will be. Thanks a lot for that, Jasmeet. And Enviro Infra, in fact, is a management that you'll be able to hear tomorrow on NDTV Profit as well. So bear that in mind. But that's not the only stock which is buzzing in the last few minutes of trade. If you just look at stocks which are moving out, after a while, Delta Corp comes in the trading parlance. So while the Nifty is down, Delta Corp has a bit of a surge in the last few minutes of trade. There is also Equitas Small Finance Bank, which has gained quite significantly, as has BF Utilities, which is up about 3.5% on fairly high volume. So 2 or 3 pretty interesting names there. Aditya, I don't know if you track Delta or BF, but you might have a view on Equitas Small Finance Bank.
Yes, on Delta Corp first. On Delta Corp.
Oh, you do? Interesting. Okay.
Yeah. Gaming is something of interest to me with respect to stocks, of course. Yeah. So Delta, again for Delta, the whole point is the gaming zone in Goa. If it gets developed, that is the point where we will see a huge upside in Delta. Mind you, Delta over the period of last 3 to 5 years has taken a severe beating because the gaming zone in Goa is not coming into the picture, and that's where the major chunk of revenue for Delta would come in the future. So from my perspective, only high risk individuals should see Delta Corp. It's a great company, but a lot of regulatory problems are there. On Equitas, Small Finance Bank, again, as I said, micro lenders and small finance banks are in focus. A lot of these stocks are trading really very cheap, and that's where the real chunk of is. Equitas is really very good. You can look at Equitas, Ujjivan, Arman, for that matter. These companies, as the microfinance cycle will continue to turn, these companies will start to do exceptionally well. From my perspective, I have a positive view. As the cycle turns, all of these companies should start to do well. You have to pick stocks where valuations are okay, but the managements are determined to turn around the business.
So what are those stocks, Aditya? So Equitas is one of them. Are there more in your kitty?
So if you look at within the financial space, within the smaller banks, or smaller NBFCs, if you may call it, as I said, all small finance banks are in focus. Something like a Credit Access Grameen is also on my radar as to their performance was really very good this quarter. If you look at Arman Financial, their performance was also steady this quarter. So pure play micro lenders is something that you need to really look at. They have taken a severe beating with respect to the asset quality that they've got. From that perspective, the valuation has taken a beating, and that's where now the margin of safety is. Market is an optical illusion. At the point when the worst of the results will come in, is the exact point to invest because the valuation there would be extremely good.
Okay. Coach, I wonder what the take with regard to some of the metal counters is. A Tata Steel, a JSW Steel holding fort on a day like this. But there has been some amount of weakness that we've seen in some of those counters already. So give us your take. Where do you see in terms of direction some of these metal names to go?
So Harsh, yesterday also, I think, metals were in focus, but because of the sharp profit booking that we saw in some of these names. And that is exactly what I read it as. This is more of a profit booking round that you're seeing. Metal, like, the realty stocks are fairly volatile. In fact, they also have that angle of, any kind of global news that coming in, usually from China. This time it was from the US that has just, brought in this sharp round of profit booking. For me, something like a Hindustan Copper, something like an Hindalco, they are actually at support zones. There's a rising trend line support on a Hindustan Copper. So I would actually create a positional long on a Hindustan Copper with a stop loss around the 255 mark, on the upside 275, 285. These are, your targets. Tata Steel is showing some sort of a recovery, but there is a channel resistance that it's met. So once past the 163 zone, perhaps you could see some sort of an uptick. But on the whole, I remain constructive on metals. A round of profit booking was anyway due in some of these names. That's come about, because of one news or another. And now I think it's time to look at, Hindustan Copper, Hindalco, Tata Steel, some of these names very constructively once again.
The winner out today, though, is Lloyd's Metal, and which is really shooting up in trade, 3.5%. I think close to life highs today, so keep that in mind. Let's take a break, though, on that note. And on the other side of the break, we get you the top buy today, sell tomorrow idea. And of course, thanks to Kush for joining in on the show and giving us the thoughts. Take a quick break.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100%.
Some strong moves. Welcome back, of course. Some strong moves into specific stocks. So Rallis, I think, is showing that sharp uptick, if I'm not wrong, in the last few minutes of trade. Look at that. Supreme Petro, a good move there. There is strength in AGI Green, and it's a really strong move from the levels that it was trading at, if I'm not wrong, 812 and counting. So some very, very strong moves being seen. Sagility has come off a little bit, by the way, from the highs of the day, but still in the green. I just clocked in the highs just a few minutes back, so bear that in mind. On a very quiet day, where specific stocks are making the move, let's welcome in Rajesh Palvia of Axis Securities on the show. Rajesh, great having you, as always. Thanks for joining in.
Good afternoon.
Would you avoid the index completely and look at specific stocks?
So index is still consolidating. 25,300 is the major support area based on the put-based concentration, and on the higher side, 25,600 is the major supply zone. I think some more time for next couple of trading session, we may see the same kind of range for the Nifty to consolidate further. And for Bank Nifty is trying to attempt to give breakout above 57,200 level, but it is not happening. So until the Bank Nifty not manages to cross above 57,200, I think here also we may see some consolidation in range of 56,700 on the downside and 57,200. But looking at the mid-cap activity and the broader market activity and stock-specific buying action, which is clearly showing that the confidence is there on the street, and once some positive triggers, maybe from global or from the domestic side, if it comes, so I think market is poised for giving breakout of this consolidation range. So buy on decline would be the strategy. On the stocks front, two stock ideas. First one is Paytm. Very strong buying action in especially in today's session. Almost stock was corrected up to the level of 20-day moving average, and from there very strong pullback action has been seen for Paytm. Now stock managed to view breakout of previous swing high also. So looking at the breakout on the near term chart, we believe that Paytm may extend its gain. Possible target towards 970 we are projecting for near term. So buy and accumulate would be the strategy for with stop loss of 920. Another stock is EPAC Durable. It's a mid cap stock, and looking at the setup for this counter, after corrective move, now stock managed to give breakout of consolidation range, and now stock comfortably trading about to 50-day, 100-day moving average, and the kind of buying interest has been there in today's session for this counter. We believe that EPAC may extend its gain 395. We are projecting target for trading point of view. Keep stop loss towards 364.
Okay, so those are both Rajesh's views on the index as well as what he's liking at this point. So his top picks. But time for our bull versus bear segment, and it's Bharat Dynamics, which is the stock in focus. Bulls are, of course, banking on the company's solid order pipeline, but what are the bears really looking at? Is it valuations? Is it geopolitical risks? Anushi here to break it down for us. Anushi.
Well, thanks for that, Harsh. So Bharat Dynamics certainly in focus today, and today's focus also on the back of the note that we are looking from Motilal Oswal, wherein they've initiated coverage on the stock, and this is with a neutral reading, however, that we are looking at. So flattish sort of a target price that we are seeing from here, but they've highlighted certain positives for the company as well as for the industry. Now, of course, local indigenization continues to remain the theme for defense. Along with this, increase in NATO spending is something that will augur well for Bharat Dynamics forward, considering that it is into a sector which is in missiles and other segments as well. So that is a key positive case scenario that we are seeing for Bharat Dynamics. It has a larger addressable market size also of 50,000 crore, which is going to bode well for the company going forward, considering that it already has around 22,700 crore of an order book. But on the bear case, geopolitical and supply chain concerns have remained for the business. In fact, if we see that FY24 numbers, they have seen a downtick in terms of where the revenue is concerned. So there were issues related to order execution, which has led to this slow revenue visibility for the business. Hence, that is the bear case scenario that we are seeing for the company. But what remains as a positive is something like the order pipeline, which remains healthy with large orders in place. This includes QRSAM order as well, even BEL being a key player here. This is roughly at the size of 30,000 crore that we are seeing. Along with that, we are seeing strong export opportunities for the business. The business did emphasize on their increasing focus towards that area, and emergency procurement pipeline also, especially post the recent domestic developments also that have taken place, is something that is a key positive that we are seeing for Bharat Dynamics in particular. However, now if you look at the bear case scenario, the stock is almost up over 67% on a year-to-date basis. In fact, its one-year forward P is also at around 70 times of a multiple that we are seeing. So valuation is something which is not at comfortable levels that we are seeing for the business, considering the overall rally that we've already seen in a lot of these defense counters. So that remains as a bear case scenario, but the company is transitioning its focus from just being a simple missile manufacturing to becoming an overall weapon system integrator, and this is in line with the company to increase its overall addressable market. So this is something that we have to keep in mind for Bharat Dynamics. Key positives that we are seeing in terms of order pipeline going forward, which had been a concern earlier because of the Israel and Gaza conflict as well, wherein they had issues in terms of procuring some of their key raw materials, which had led to an overall slower revenue growth. But overall, going forward, they are targeting about 25 to 30% of a CAGR in terms of where this number is concerned. So something that we should be watching out for, but valuations continue to remain a concern. So this is the overall bull bear case scenario that we are seeing for Bharat Dynamics.
Okay, thank you so much for that, Anushi, for that perspective on Bharat Dynamics. Aditya, let me expand the conversation a little bit and not just limit it to a BDL. What's your take with regard to defense as a whole? Is it looking expensive? Do you prefer the private players because at least there is growth there? And how do you therefore marry valuations with growth and with the large opportunity which is available?
So time and again, reports come out and say that the indigenization opportunity is immense. Everybody knows this. The market already knows this, that the focus of the government continues to remain indigenization. Now what is happening is that stocks trading at 70, 80 times, 90 times multiple are being sold with respect to the size of opportunity. The same thing happened in 2020, in 2020 to IT, in 2021 to chemicals, and also in 2020 to pharma. Look how time correction has taken a lot of these stocks. So from my perspective, these companies have a multi-decadal story, and these stories will continue to keep moving forward. But in the shorter term, the valuations are really very expensive. And in the shorter term, many of these counters could undergo time correction, after which they could continue to move forward. So from my perspective, I am a little bit underweight defense. There is a bubble in the market that everybody wants to own the defense sector. And that is the worst, possibly the worst time where you are paying extremely expensive valuations. So from my perspective, most of the defense stocks are on avoid. I'm watching out for a lot of them, but no recommendations as of now, as most of them continue to trade at about 70 to 90 to 100, even higher than 100 times multiple, which is not very comforting as a starting valuation for any investment.
Okay. What has done well today, though, as we said, is energy transition in some fashion, because Premier Energies, a couple of other solar companies had some good moves in trade today. This bucket has, in solar companies, I think Bari 2 was doing reasonably okay today, 3172. Our valuations here, I'm sure they're expensive. Is the PEG ratio expensive, Aditya? Are you comfortable here, or here too, like defense, you are staying back?
That's a very interesting space. Energy will continue to lead the country over the next 10, 15, 20 years. And that is something that we have to concentrate on. In my perspective, particularly Vare and Premier look really very interesting. The battery cell space that they are venturing into will drive the growth for the next 10 to 15 years. Although these stocks are really very expensive, but it is worth watching out both for Premier and Vare Energies. Both of these stocks will continue to do well for the next 10 to 15 years. So I'm positive on this space, but very cautious with this valuation. Slow and steady addition would be warranted in this entire thing.
Okay. Rajesh, do you have any thoughts here?
So I think there is a fresh breakout on Premier Energy, and the way stock now managed to be breakout on the weekly as well as on the daily chart. I think this stock is ready to extend its gain, and I think if it continues to trade above 1085 level, possible target towards 1200 we may see in the near term perspective. So yes, one can look Premier Energy at this juncture, and the fresh breakout can take a stock further higher towards 1200 level.
Wow, big moves here into these buckets for sure. You know, the other thing is when you try and think of what could happen to this earnings season, and starting off, of course, with a wealth company today and TCS, which is the bellwether IT firm. We've spoken so much about TCS. Aditya, what about wealth, capital marketplace? And I know Anand Rathi Wealth is a very different player relative to some of the others, right? In some sense, very large mutual fund portfolio, I would reckon a much more steadier business than some of the other wealth firms. But I'm clubbing that along with other wealth firms. What's your sense here about what the next 12 to 18 to 24 months have in store for these companies?
So for mutual fund companies, for mutual fund distributors such as Anand Rathi, it will be a good time as companies continue, as Indian public generally tends to invest in the mutual fund space. These companies will do exceptionally well. The threat to all of these companies will come from what Jio wants to really do. Does Jio want to go only direct plans? If that is the real case, of course, your distributors are required, but we could then see some compression in the margin that most of these wealth distributors or distributor of mutual funds really make. So from my perspective, I would be very, very cautious on wealth managers. Jio has, as I was reading yesterday, Jio now says that they will not get a distributor regular plan, and they will only do a digital direct plan. Zerodha, for that matter, is trying to do the same thing with their mutual fund as well. So distributors will not be out per se permanently, but there could be a compression in the margins that they really make, and then the profitability of many of these companies would start to get hit over the period of 3 to 5 years. And mind you, as the industry continues to keep developing, the margins for mutual fund companies as well as distributors will slowly and steadily on a glide path start to come down. So from my perspective, I'll watch out for those. These stocks particularly are not cheap, they are also expensive. So from my perspective, sticking to a mutual fund company makes much more sense. A UTI AMC for that matter, or an Aditya Birla AMC from a valuation standpoint looks really very good. If you look at HDFC AMC also, the turnaround in the business from underperformance to outperformance within their schemes is tremendous. That's why the stock has rebounded and will continue to do well. So from my perspective, mutual fund companies within the entire capital market space is something to watch out for.
Okay, certainly watching out for that. Should we watch out for tires as well is the question. Tire major focus at least. I mean, MRF is in focus today with some triggers bringing the stock on the radar of the analysts. My colleague Puneet is here to tell us more about it. Puneet.
Well, thanks so much for that. So, the stock actually hit a live high, not just a 52-week high, a live high yesterday in trade, almost crossed 1,51,000 in trade. And we put the spotlight because over the last 3 months, the stock's up 30%, despite not, putting in some major triggers. So we looked at the space very closely and the key aspects what's driving this positive momentum. Now, the three key factors that we pulled out. One is, of course, the natural rubber prices subsiding from the high levels of last year. It was hovering around 240 rupees per kg. It's currently around 200 to 205. So it subsided majorly in the last 1 year, which will help boost margins. The second reason is expectations of a better growth performance, specifically in markets like Europe this year. It's been underperforming over the last 24 to 36 months. So it finally seems to be catching a bottom. And that's what analysts are also reflecting and saying, because they believe that the sector is currently at the bottom of the margin cycle. And going forward, that boost in margins will come for players like MRF. So let's look at the natural rubber pricing aspect. We mentioned briefly June 2024 is which is at a high of about 240 rupees per share. currently hovering around 190, and hence we could see some margin pivot coming for these companies. When you look at its nearest peers and how the MRF has actually competed with the likes of Apollo and SEAT, because they largely operate in both the two-wheeler and the four-wheeler space, you could see the kind of growth outperformance in terms of revenue was the highest for MRF, and despite profits dipping for all players, and that was largely because of natural rubber prices as we just highlighted, MRF had the least fall in its profits, led by operating leverage as well as a superior financial performance by the company. So it's not only doing well for itself, but even competing with the others in a much better fashion. In terms of, the other aspect was that how much more upside from these other levels as well. For FY26 specifically, brokerages are seeing a 9% growth in revenues. They're also seeing margins to go up by 210 basis points to 16%, a level that was only last seen pre-pandemic. So it's an important level to watch. And they're also looking out for better commentary coming in amongst export markets as well as for the domestic market as well. So those are some of the key aspects for MRF in terms of both the financial performance as well as how it's outperforming its peers in the last year.
Puneet, can you tell us what is the valuation picture looking like, and what is it that brokerages are making of these valuations?
So estimating a high single-digit growth, but in terms of valuation as well, it is trading at the lower end or compared to its 5-year average. So we've taken the trailing P, 34 times price to earnings, but also in this year of FY26, it is expected to have a higher growth outperformance in terms of revenue. So it's actually expected to come to 26 times price to earnings. While compared to the other players, it's slightly expensive, but it has shown that financial outperformance versus peers. So hence, it is slightly expensive, but the financial metrics and the leadership in each segment gives it that pivot. Finally, in terms of the analyst target prices as well, we just culled out a few of them. CLSA has the highest target price, 11% upside that they're seeing of roughly 1,68,000. The others as well, BNK as well as Anand Rathi, maintaining that positive view going forward. So overall, it is expected to have a strong Q1 performance, at least in terms of margins. Revenue might come in the second half, but good times ahead for MRF definitely seems so.
Well, definitely seems so. Thank you so much, Puneet, for that. Aditya Shah, do you have a view with regard to an MRF?
For a single-digit growth, paying 35 times multiple does seem really very expensive. From my perspective, there are many auto ancillaries who are growing at about 10 to 15%, available at decent valuations of 30 times. So from my perspective,
it's also the margin. Aditya, sorry, it's also the margin lever, right? So that 16% margin which Puneet mentioned, last seen pre-COVID, does that at all make this feel attractive?
As I said, that the valuation, from my valuation perspective, the argument cannot be that it was trading at lower end of the band. That's why you invest, and then it continues to move up because the margin will improve. From my perspective, 34, there's not a huge difference between 34 and 35, 36 times multiple. From my perspective, a lot of auto ancillaries are available within that space, which are growing much faster and are decently valued at about 30 times, 25, 30 times. So from my perspective, there's no case to invest in a company which is growing at about single digit at a very high PE multiple. Just for the margins to improve per se. Growth, particularly per se, needs to improve to about 10 to 15% for any chance of further re-rating for the stock.
Okay, so point taken. Rajesh, do you have a view with regard to an MRF?
So clearly, stock is in bullish trajectory only, and the way stock has moved up in last couple of weeks, now stock is negotiating with its Fab 2024 swing high. Looking at weekly as well as the monthly structure, I think stock is poised for giving a multi-month breakout on a monthly chart. And I think once a stock manages to cross above 1,50,000, 51,000, I think upward trajectory will extend, and then possible rally can extend towards 1,65,000, even 70,000 also. So I think stock is very well holding above all its near-term, short-term moving averages. So and whatever minor dip or corrective move which we are witnessing in these counters are attracting buying interest. So from on the technical perspective, I think 1,40,000 40,000 should be your stop loss to hold the position. Possible rally can extend towards 1,65,000 to 70,000.
The other pocket that's done relatively well today is the power financiers, PFC, REC, IREDA. All three are buzzers. IREDA to come out with numbers. We await those numbers. We spoke about this yesterday at close as well, that there was a couple of sales notes which were bullish with regard to IREDA valuations at around 4.5 times current, maybe 4 times 1 year forward, looking relatively better compared to what they have been in over maybe the last year or so. But PFC, REC initiating coverage, there's an overweight rating note with regard to both of those, 21 to 23% upside. And a lot of that upside is because there is deep value in those names. Aditya Shah, you understand lending well, you understand deep value well. Would you agree?
So from my perspective, a lot of re-rating of PSC, REC, and for that matter, IREDA is also done. Let's talk about IREDA. IREDA is going to come out with its numbers. The loan growth is already known. They gave out an update. Their loans to Gensol is something that will be classified as NPAs. And future guidance for NPAs will then move the trajectory for the stock per se. A lot of green energy premium is being given to a stock like IREDA when it's trading at about 4 times price to book. And any negative surprises, as the Gensol surprise for IREDA, will be very negative for the company per se. As you can already see, the stock has not done anything over the last 6 months, as and when the Gensol NPA issue came up. So from my perspective, I would tend to avoid all of these stocks which are trading. IREDA is trading at an expensive valuation, and PFC, REC again have the problem where PFC is again a lender to companies like Gensol. So from my perspective, again, tend to avoid these companies. PFC, REC have been fully valued now. Their re-rating is completely done. IREDA is too expensive for me at this stage to invest. We'll look at future trajectory and future guidance with respect to NPA. Then we can take a call on it.
So that's the take on the fundamental side on some of those. Of course, IREDA's numbers will come out. We'll speak with management as well. But what's the take that you have, Rajesh, with regard to 3 of these power financier names?
So Harsh, all these 3 stocks are still consolidating in narrow range of price action. So looking at the weekly structure, almost for last 10-12 week, all these 3 stocks are trading in the range only. Looking at the structure for PFC now, stock is negotiating with its multiple supply zone on the weekly chart, which is placed at around 435, 440 zone. If at all stock manages to give breakout above 440, then we may see some rally towards 465, 470 zone. But till the time it's not able to give breakout above 440, maybe consolidation in range of 410 to 440 would be the range for PFC. Again, the same kind of behavior for REC. Now stock is negotiating with its falling trend line on weekly chart. 408 is the immediate hurdle for the stock. If at all any breakout comes above 408, then yes, the stock can extend its gain towards 430, 440 zone. So I think those who wants to wait for breakout would be the right strategy. I think post breakout, one should initiate the buy in this counter. I think some more consolidation is likely to be there for all these 3 stocks.
BTST strategy, Rajesh?
So JSW Energy is looking attractive. If we analyze on the daily chart, there is a triangular formation breakout on the JSW Energy chart. Looking at the breakout, we believe that 548 would be the next target. So one can buy this stock with stop loss of 522.
Okay, all right. So that's with regard to JSW Energy being one of the picks as well. I want to also take in views because there are plenty of other buzzers, and one set of buzzers is within the life insurance space. Let's pull up an HDFC Life. Let's pull up a Max Financial. A couple of those names disclosed numbers for the month of June, and you're seeing that sharp downtick with regard to HDFC Life, the stock. So 2% lower on an HDFC Life, 1.5% up on a Max Financial on the back of the numbers. Let's pull out those numbers, that table that we have with regard to life insurance if we can. and that will give us better perspective that growth for a max financial of 20% plus was quite strong in relative terms, and HDFC Life relatively weak, -6% YOY, where the growth number for the month of June is concerned. But when you're looking at the overall Q1 numbers, HDFC Life doing relatively okay with around a 14% growth, but Max Financial standing out. Aditya Shah, there's been a large re-rating where the life insurance space is concerned from a valuation perspective. One, is that re-rating warranted? Because underlying growth does not seem to be extremely strong. Are you seeing something different? That's point number one. Point number two, do you believe that now full price has been arrived at and there's very little valuation comfort where life insurers are concerned? Or do you see the next year or two to be a strong growth leg up for life insurers? Give us that perspective.
Well, so I don't think there will be a strong leg up in growth. That can only happen if the government ends up cutting some taxation. There's a lot of discussion around on the GST cut, particularly on the pure protection plan, which is the term plan. So from my perspective, I don't think there will be spectacular growth. I expect the sector to grow somewhere at the range of 10 to 15%. And my estimate is HDFC Life within the private sector will be the one who will be leading the growth. I think that they have guided at least for the next 2 to 3 years for a growth of 20 to 25%. Similarly, LIC, the margin improvement that LIC has embarked on should continue. I don't think LIC will outperform on growth. LIC will outperform in improvement of margins per se. So from my perspective, this is a good space. The next wave of growth will be contingent on the fact as to how the government tries to cut in taxation to give a boost to pure pay protection plan. From my perspective, LIC is the only one where there is some bit of valuation comfort. All other stocks are really very expensive. And within the private sector space, HDFC Life, because of their aggressiveness with respect to growth, continues to be the top pick.
Okay, Rajesh, first off, I want to understand, and let's pull up TCS very, very quickly because I'm seeing a bit of a spike on that stock. And this is, of course, ahead of earnings. Our market seeing something we are not. There you go. That spike on the TCS stock is visible now, 0.4% higher and rising. Rajesh, what are you seeing?
So yeah, stock has taken the support from its multiple support zone area, which is placed at around 3370, 3400 kind of zone. So I think 3370 is the key level to watch for. If stocks able to sustain above these levels, then yes, some pullback towards 3430, 3440 would be there for the counter. But still, stock is in broader consolidation range. The major breakout level for the stock is placed at around 3490, 3500 kind of zone. So until that breakout not happens for the stock, we may again, see the range bound activity, though there is an earning announcement is going to happen, but post earning 3500 needs to cross. If that level taken out, then yes, short covering action can take stock further higher.
And Rajesh, what's the view like with regard to an HDFC and a Max Fin?
So HDFC Life, after today's decline, now stock is almost trading at 50-day moving average support area. So I think overall structure is bullish. Some corrective move is happening in this counter, but I think until the stock not breaks below 760, 755 zone, trend is likely to exhibit on the bullish side only. So one needs to closely watch 755 level. If it breaks, then some serious profit taking may attract in this counter. So 755 would be the important level on the downside. MFSL is also in the bullish trajectory only. Some profit taking is happening at higher level, but still stock is comfortably holding above 50-day moving average. So that's the level where, again, buying interest would be there for the counter in correction. So 1550, 1540 would be the again level where, one can closely watch that level. If it's able to defend those level, I think one can again deploy long trade in this counter. Some pullback action from those level would be likely to be there in this counter.
Aditya, I have 30 seconds. Do you have a view with regard to IT TCS?
From my perspective, what I will watch out for on the result is what is the future guidance and how are deal wins taking place. From my perspective, the entire sector would have bottomed out. and slowly and steadily progress would be made for the sector to move up. So I'm positive on the IT companies. In the large cap space, HCL Tech will continue to remain my favorite, and in the mid cap space, companies like L&T Technology or Tata Tech, for that matter, which are seeing some slowdown, good time to invest in such companies.
Okay, thank you so much, both of you gentlemen, for coming in, giving us all of those views. We'll let you go, but let's quickly, last minute or so, let's look at how markets have shaped up over the last hour and a half. We're 0.5% lower on the Nifty, so we've slipped a bit further, maybe 30 to 40 points further over the last hour and a half. We're 0.5% lower on the bank Nifty also, so that's now started mirroring the Nifty. Let's pull up the index and let's see the intraday chart. We're likely at the day's lows or just off it. There you go. And the bank Nifty as well. Can we have that? There you go. So 0.5% lower on the bank Nifty. We're at the day's low on that one as well. So some bit of pressure creeping in. I want to also pull up the Nifty IT index because that move by TCS, I want to see whether that's made any difference. Of course it has. There you go. You've seen a bit of a spike on the Nifty IT index and TCS. Let's pull that one up before we look at the heat map very, very quickly. And there you go, TCS. Look at that spike. That is impressive. Nearly 0.5% higher from just a few minutes ago. So clearly you're seeing that spike on a TCS. But let's pull up the heat map on the Nifty 50. And there you go. The breadth has weakened just a wee bit more than what it was maybe an hour and a half back. But you have some more strength in the winners. So that is likely a positive. Who have really sat in the green? Let's try and dissect that. Tata Motors is one. Some Tata Group names have really stood out. So TCS has entered this list of stocks in the green. Tata Steel, Tata Motors, all of those, and Trent, all of those have closed in the green. IndusInd is the top gainer on the index today. You're also seeing some bit of zing on a Maruti and the Bajaj twins. So those, that's the kind of texture of the market. Hindalco, Tata Steel, JSW Steel, all three closing in the green means that metals have done well in trade today. But outside of that, everyone else sitting in the red with an Airtel at the bottom. Asian Paints down 2% as well, and an HDFC Life also down 2%. Life insurers came out with data, so that has impacted HDFC Life. Let's pull up the breadth on the NSE, and that breadth, well, it's been pretty much stagnant at least since the early morning, but the breadth largely even Steven, and that's been the case for a predominant part of this week. So that seems to continue. Let's look at the mid cap and small cap. Let's see if there's been some bit of negativity there. Not really. A 0.25% lower on the Nifty mid cap, so some outperformance seen there. The small cap index absolutely flat. So again, some outperformance seen in broader markets at close versus maybe an hour and a half ago. Let's also look at how the sectors have done. And metals, of course, is one sector which did well. Realty is the other one within broader markets which has done well. 0.7% on a day like this, not bad at all. The Nifty India Defense Index is where we had left it. The Nifty IT Index is down 0.8 odd percent. So there's been a bit of a leg up that it's got from TCS. And the PSU Banking Index is down 0.8 odd percent. So 0.8% lower. FMCG down 0.5%. It's been a bit of a choppy week for the Nifty FMCG index, I must say. That's the second day out of the 4 in the red, 2 days out of the 4 in the green as well, and it's been the top gainer when it's been in the green. So it's been a bit of a choppy week for the Nifty FMCG, but that's how we've shaped up. Now, BSE 500, top gainers, top losers. Let's look at those, and those are some names for you. Lemon Tree up 8%. The other one is Capri Global up 6%. Well, we spoke about a campus. We've spoken about a few names. Borosil Renewables has done well for itself as well. Nesco is up 4%. Metropolis, BDL. BDL was a bull versus bear today. So interesting one. PI Industries is the other one, which has done, which has sunk in trade, 3% lower. And then there's a Hudson Agro. So those are some big movers. Let's look at what to look out for. And it's US initial jobless claims on the macro. But outside of that, we'll look more at the micro because there's plenty of movers. First off, those are some dividend adjustments for you. You'll want to look out for those coming up on your screen. Mahindra Logistics, IDFC First as well, and Dynamic Cables and Roto Pumps. So those are some names for you. That's on the bonus issue side of things. Avenue and Elecon are two earnings expected to come in tomorrow. Avenue, one of the first time when we've seen it coming out on a weekday. So we'll look out for that one. Not sure whether it's going to come during market, but likely post. So that's the other one that you look out for. But in terms of earnings, you'll see impact. TCS, Ireda, both of those names will come out with numbers. Maybe we'll see an impact tomorrow. But with that, completely out of time on India Market Close. From Neeraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design.
Welcome, you're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. So viewers, Sensex and Nifty lose around 0.5% each to close lower for second straight session after trading in a tight range. Mid and small cap indices outperformed the benchmarks. With most sectors closing in the red, metal and realty sectors bucked the trend, while IT, PSU, banks and pharma dragged the market lower. Amber Enterprises is set to consider a fundraising plan of up to 2,500 crore rupees with a board meeting scheduled for July 12th. Now, to approve the resolution, this move actually comes ahead of the government's new 22,000 crore component scheme, signaling strategic positioning by the company in the evolving market. The fundraise aims to support long-term growth, including capital expenditure, subsidiaries investments, and debt repayment and potential acquisitions. Ambuja Cement se ARM commissions a new brownfield grinding unit at its Sindri plant in Jharkhand. The newly operational unit has a grinding capacity of 1.5 million tons per annum, boosting the company's total installed cement capacity to 104.45 million tons per annum. This expansion strengthens Ambuja Cement's production capabilities and supports its growth strategy in the region. Enviro Infra, in a joint venture with Alto Rapro Infra, secures a significant order worth 395 crore rupees from the Maharashtra Industrial Development Corporation. The order spans a period of 24 months and marks a major milestone for the company. Now, this project is expected to enhance Enviro Infra's footprint in the industrial infrastructure sector, supporting Maharashtra's development initiatives. NIT Learning announces the acquisition of Germany-based MST Group for 225 crore rupees. MST Group is a leader in the managed learning services across Germany, Austria and Switzerland. The strategic acquisition significantly expands NIT Learning's presence in Europe and boosts its penetration in the automotive and industrial market segments. The deal also adds 7 market-leading companies to NIT's portfolio, strengthening its position as a global leader in learning and development solutions. HCL Tech partners with Cypromos, a subsidiary of Astemo, specializing in software and cloud services to advance innovation in the autonomous and smart vehicle ecosystem. This multi-layer collaboration leverages HCL Tech's software testing platform, TestSphere, AI-driven service platform, AI Force, and cloud engineering solutions, CloudBridge, to accelerate the development of self-driving and driver assist technologies. So together, they aim to reduce hardware dependency, speed of validation, and deliver safer, smarter vehicles at scale, supporting millions of users across 150 countries. Redington signs a revenue acceleration pilot, or REAP, contract with Amazon Web Services, establishing a downstream strategic distribution agreement. Now, this partnership enables Redington to extend AWS's technical expertise and resources to its network of partners, accelerating cloud adoption across India. So Redington support partners with customized go-to-market strategies, technical guidance, training and marketing assistance to drive impactful business outcomes. The collaboration aims to foster innovation and sustainable growth, empowering partners to scale and unlock new digital transformation opportunities in the dynamic cloud environment. RailTel bags a 17.47 crore order from the General Administration Department of Chhattisgarh government. The order involves network connectivity, operations and maintenance services with execution scheduled by January 31st of 2026. This addition strengthens RailTel's domestic portfolio, contributing to its robust order book, which stands at 7,018 crore rupees as of March 2025. The contract underscores RailTel's growing presence in government infrastructure projects and its commitment to enhancing digital connectivity across India. Small Cap World Fund sells a 2.08% stake in Sammaan Capital at nearly 123 rupees per share. This transaction reduces Small Cap World Fund's holding in Sammaan Capital from 4.91% to 2.83%. The fund had acquired the stake during January to March 2025 quarter. The shares were bought by Thakkar Nilesh Kumar Parshuram. Now, this movement in shareholding indicates strategic portfolio adjustments by the institutional investor and a new investment by a notable individual. JM Financial initiates a buy on Tips Music with a target of 800 rupees. So amid industry turbulence, the company strengthens its foothold backed by strategic global partnerships and heavy content investments. JM Financials expect 24% earnings growth for the company in the medium term and even prefers the counter over Saregama. Asian Paints completes a block deal, selling its entire 4.41% stake in AkzoNobel, 20.1 lakh shares at 3,651 each rupees. Now that's a solid 7% premium over the open offer price of nearly 3,418 rupees. The exit rakes in 730 crore rupees, so doubling its original investment from 2017 to 18, when the stake was valued at 360 crore rupees. Strategic timing meets stellar returns in this decisive move. Morgan Stanley's latest Q2 of calendar year 2025 CIO survey flags persistent weakness in the IT services growth. Year over year, expectations dipped to 2.5% down from 2.6% in Q1. With no major spending catalyst and macroeconomic conditions still lagging, IT firms increasingly resort to discounts. Discretionary budgets remain tight, reinforcing concerns over sluggish momentum in the sector. Syrma SGS denies reports claiming a 1,800 crore rupees investment for a PCB plant in Andhra Pradesh. The company states it is unaware of any undisclosed developments. While Syrma SGS is indeed setting up a printed circuit board facility, details remain aligned with officially disclosed plans. The US FDA wraps up its pre-approval inspection of Emcure Pharma's oncology facility in Gujarat, held from June 30th to July 8. The inspection concluded with zero observations, signaling full compliance and a strong regulatory performance. Vari Energies initiates an offer for sale, offloading up to 10 lakh shares, representing 2.4% of Indosolar's paid-up capital. The stake sale, aimed at meeting minimum public shareholding norms, marks a strategic compliance-driven adjustment in its holding. So, as Indosolar remains a subsidiary, Vari's stake reduces from 96.15%. Small Cap World Fund offloads 2.08% stake in Samman Capital at 122.56 rupee per share. The sale, made just months after its January to March 2025 entry, brings its holding down to 2.83% from 4.91% as of June. So a swift divestment strategy unfolds as its investor churn continues in the mid-cap space. JP Morgan expects Q1 of FY26 to mark a shift from weak earnings to recovery. Thanks to the last year's low base and renewed economic momentum, the firm sees Nifty 50 trading between 26,500 and 30,000 over the next 6 to 9 months. Key growth sectors include banks, consumer hospitals, real estate, defense, and power, positioning investors for a potential upswing. Morgan Stanley initiates coverage on REC and PFC with an overweight rating, citing their pivotal role in financing India's energy transformation. Despite being out of favor for the past 9 months, the brokerage sees renewed value in both stocks, citing strong fundamentals, consistent returns, and resilient asset quality. The note highlights their ability to deliver steady growth while supporting the country's infrastructure and clean energy ambitions. MRF surges to a life high of 1,51,552 rupees, driven by easing natural rubber prices and improving export prospects, especially from Europe. So domestic rubber rates have corrected to 190 to 200 rupee per kg, down from 240 to 250 rupees per kg in June 2024. Analysts believe that the tyre sector is emerging from the bottom of its margin cycle, setting the stage for sustained earnings momentum. Motilal Oswal initiates neutral on Bharat Dynamics with 1900 rupee target. The brokerage firm sees Bharat Dynamics well positioned to benefit from the rising global defense spending and strong domestic tailwinds. The company is also emerging as a key integrator of missile platforms with a 50,000 crore rupees addressable market and a robust 22,700 crore order book. So supply chain issues are easing and execution is also expected to scale up, while indigenization efforts remain central. Valuations are also seen as fair. The initial public offering for SmartWorks co-working spaces saw a subscription of 0.37 times by 3:25 p.m. On the first day of bidding, non-institutional investors led the subscription at 0.63 times, with retail investors and employees also showing interest. The IPO opened from June 10th to 14th and has a price band set between 387 to 407 rupee per share. The company aims to raise a total of 583 crore rupees through this offering, comprising a fresh issue of 445 crore rupees and an offer for sale of 138 crore rupees. India and the US are restarting negotiations for a mini trade deal, with Indian negotiators set to visit Washington, D.C. soon as the US tariff deadline shifts to August 1. India remains firm on excluding agriculture and dairy, key sensitive sectors, while the US seeks market access for these. So talks aim to avoid a 26% tariff on the Indian goods, focusing on labor-intensive sectors like textiles. Uncertainties linger due to Trump's threats of additional tariffs on BRICS nations and pharmaceuticals. SEBI is investigating Ahmedabad-based Sprite Agro Limited for multiple possible violations. So sources to NDTV Profit have said that the probe covers issues related to bonus and split shares, rights issue, and suspicious offloading of shares. So the alleged violations took place between August 2023 and April 2025. While the investigation is still underway, investors have been left largely in the dark. The Finance Ministry has given in principle approval to compensate state-run oil marketing companies, BPCL, HPCL and IOC, for massive losses on subsidized LPG sales. OMCs incurred over 40,000 crore rupees in under-recoveries in the FY24, with the FY25 losses at 41,000 crore rupees, following 28,000 crore rupees in the FY23. So the Petroleum Ministry is advocating for relief, with a compensation mechanism in the works, potentially disbursed in tranches. So this move aims to ease the financial strain on OMCs without passing costs to consumers, ensuring stable LPG prices. The National Stock Exchange is gearing up for its long-awaited IPO, with sources indicating a launch by the end of FY26 or Q1 of FY27. So the Securities and Exchange Board of India is prioritizing the approval process, addressing open observations and complaints to clear regulatory hurdles. NSE's efforts to settle past legal issues, including a proposed 1,400 crore rupee payment, are paving the way for filing its DRHP. The IPO, expected to be a landmark event, aims to raise significant funds for the expansion. Starlink, Elon Musk satellite internet venture, has won in space approval to deploy its Gen 1 constellation of 4,408 satellites, confirming NDTV Profit's report on May 28. Now, this clears the way for high-speed internet across India's cities and remote villages, offering 600 Gbps capacity. Starlink now needs test spectrum from the DOT to meet security rules. The authorization, valid until 2030, or the satellite's lifespan, sets Starlink to compete with Jio and OneWeb, transforming India's connectivity landscape with faster, more accessible internet services. Trouble seems to be mounting for Vedanta Resources. The company has lost Chris Griffith, its top executive heading the base metals business. He was in charge of key international assets, including zinc mines in South Africa and Namibia, and also served as president of Vedanta's global operations. His exit comes just days after a US-based short seller, Viceroy Research, alleged that Vedanta's group structure poses major financial risk to creditors. So Vedanta has strongly denied the report, calling it a mix of misinformation and baseless claims. Amazon is stepping up its game in India's quick commerce race. The global e-commerce giant has launched 10-minute deliveries at selected pin codes in Delhi and Bengaluru under its Amazon Now service, directly taking on local players like Blinkit, Zepto and Swiggy Instamart. The move marks Amazon's big push into one of the fastest growing segments of online retail. Emirates Airlines signed a memorandum with Crypto.com to enable cryptocurrency payments for flight bookings targeting younger, tech-savvy travelers. The integration via Crypto.com Pay will convert digital currencies to UAE dirhams and enhancing payment flexibility. Dubai Duty Free also joined the crypto initiative, aligning with the UAE's ambition to lead as the global crypto hub, with over 650 crypto firms in Dubai's DMCC zone. So other Gulf carriers like the Air Arabia already accept stablecoins, signaling regional shift towards digital payments. According to media reports, the IO Products team has officially joined OpenAI. OpenAI spent nearly $6.5 billion to acquire the hardware startup, which was co-founded by Johnny Ive and several of his former Apple colleagues. So deal was first announced in May, even when Ive and OpenAI CEO Sam Altman shared a video about their big vision. So Ive will take the lead on designing a next-gen AI device, while OpenAI will power it with its artificial intelligence expertise. Apple is almost ready with the first hardware upgrade for its Vision Pro headset, and it could launch by the end of this year. According to reports, the updated headset will offer a big performance boost and support for AI-powered features. The upgrade will swap out the current M2 chip for Apple's faster M4 chip, along with new components to better handle AI tasks. India and Namibia strengthened their partnership as Prime Minister Narendra Modi and Namibian President signed 4 new agreements. The pacts cover a wide range of areas like digital payments, defense cooperation, agriculture, healthcare, and critical minerals. Namibia is also set to roll out India's UPI digital payment system later this year. India has called for a faster review of its free trade agreement with the ASEAN, officially known as the ASEAN-India Trade in Goods Agreement. Commerce Minister Piyush Goyal raised the issue during his meeting with Malaysia's Trade Minister. Goyal said that India looks forward to speeding up talks with all ASEAN member countries. This comes after reports suggested India might consider walking away from the pact due to slow progress in the ongoing review. A 4.4 magnitude earthquake hit Delhi NCR with tremors felt in Delhi, Noida, Gurugram, Faridabad and parts of Uttar Pradesh for 10 seconds. The epicenter was near Jhajjar, Haryana, at a shallow depth, amplifying the jolt. No casualties or major damage have been reported. The tremors sent people rushing out of homes and offices. Authorities have urged everyone to stay alert and follow basic safety measures in case of aftershocks. The Supreme Court is set to hear petitions challenging the Election Commission's special intensive revision of Bihar's electoral rolls. A bench led by Justices Sudhanshu Dhulia and Joy Malia Bagchi will examine concerns that the process could remove valid voters ahead of the state's assembly polls. Senior lawyers include Kapil Sibal and Abhishek Manu Singhvi argue that the revision puts unfair document demands and tight deadlines of nearly 40 million voters. US President Donald Trump has announced new tariffs on imports from 7 countries set to take effect on August 1. He posted official letters on Truth Social outlining duties, 30% tariffs for Iraq, Algeria and Libya, and 25% for Brunei, Moldova and Philippines. An additional tariff on Sri Lanka was also announced. So the move is a part of Trump's strategy to address persistent trade deficits and to pressure nations into negotiating better deals with the United States. US President Donald Trump has announced a 50% tariff on copper imports effective August 1st. Now, this move aims to bolster the US mining industry and address drug smuggling, particularly from Mexico and China, who are key copper suppliers. So while supporters say that it prioritizes American jobs and security, critics warn that it could raise costs for US industries and consumers. Brazilian president has strongly rejected US President Donald Trump's threat to impose a 50% tariff on Brazilian goods, saying that Brazil will not accept any form of tutelage. Lula emphasized that Brazil is a sovereign nation with independent institutions and pledged to respond using its economic reciprocity law. Now he further disputed that Trump's claim of a US trade deficit with Brazil, pointing out that the US has actually run a $410 billion surplus over the past 15 years in trade with Brazil. The South Korean court has approved a fresh arrest warrant for former President Yoon Suk-yeol, sending him back into custody over his brief declaration of martial law in December. Special prosecutors say that Yoon poses a risk of destroying evidence tied to serious charges, including abuse of power and obstruction of justice. A final decision on his continued detention is expected later today or tomorrow. Yemen's Houthi rebels have sunk a second cargo ship in the Red Sea this week, so killing at least 4 crew members and leaving 15 missing. The Libyan-flagged Eternity Sea was struck by rocket-propelled grenades and small boats near Yemen port. 6 crew members were rescued after drifting for more than 24 hours, while others remain unaccounted for. This attack comes just days after the rebels sank another vessel, Magic Seas, marking a dangerous escalation in the maritime violence. Novak Djokovic stormed into his 14th Wimbledon semi-final, setting up a blockbuster clash with world number 1 Jannik Sinner, who defeated Ben Shelton despite an elbow concern. Now in the women's draw, IGA Swiatek reached her first Wimbledon semi-final, overpowering Lyudmila Samsonova with relentless baseline play. So Swiatek now faces Belinda Bencic who outlasted Mira. Djokovic, chasing a 25th Grand Slam, must navigate Sinner, and defending champion Carlos Alcaraz, looming presence in the men's draw. The Enforcement Directorate has named 29 celebrities, including Vijay Deverakonda, Prakash Raj and Rana Daggubati, in a money laundering case linked to illegal betting apps. So the investigation under the Prevention of Money Laundering Act stems from 5 FIRs in Andhra Pradesh and Telangana. These stars allegedly promoted apps like Jungli, Rummy and A23, violating the Public Gambling Act and causing user losses. So some celebrities claim that they endorsed legal skill-based games and have since stopped. Well, with that, viewers, it's a wrap on Market Express, but please stay tuned to NDTV Profit as there's more lined up ahead on the other side.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Nifty Sensex extend losses for second day as IT stocks weigh. Bharti Airtel, HDFC Life lead the gains. All sectoral indices and lower except realty, metal and oil and gas, which buck the trend. Sources tell NDTV Profit that the much-awaited NSE IPO is on the fast track. Initial approvals are not far away. Sources tell NDTV Profit Indian negotiators will soon visit Washington, D.C. for another round of trade talks. The government plans to pay back oil companies for the money they lost by selling LPG cylinders at subsidized prices and is working out exactly how to do it. Sources say SEBI is currently investigating Ahmedabad-based Pride Agro for several violations. The regulator is probing violations related to preferential allotments, suspicious trading, and offloading of shares by non-promoter entities. Amazon ventures into 10-minute delivery service Amazon Now, currently running in select pin codes in Delhi and Bengaluru. US President Donald Trump says he would strongly consider backing a new Russia sanctions bill that proposes a 500% tariff on countries like India which purchase Russian energy products. Hello and welcome. Good evening. This is Profit 360 on NDTV Profit, and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets as well as national and international news. To begin with, the benchmark indices ended lower for second consecutive session. Nifty closed 0.4% lower, while Sensex closed below 83,200. IT, PSU banks and pharma dragged the markets lower, while metal and realty